Dozens of spot altcoin ETFs could be approved at any moment. For TradFi investors, this means having access to a whole range of altcoins. For crypto investors, this means, potentially, altcoin season. But could these ETFs backfire? If they cause investors to sell stocks in altcoin treasury companies to buy ETF shares instead, this could force altcoin treasury companies to sell their altcoins to stay solvent.
None of this works if you're not solvent.
So today, we take a close look at this possibility, which altcoins could be affected, and what's likely to happen after the altcoin ETFs launch. My name is Guy. Stay tuned. Before we begin though, I'm not a financial advisor and nothing in this video should be considered financial or investment advice. This video is for educational purposes only and it's intended to inform you about the risks associated with spot altcoin ETFs. If you find content like this helpful, then you can return the favor by bashing that like button. Now, let's start with some context. We all know that the spot Bitcoin ETFs have been making waves ever since they were approved in January 2024. What you might not know, though, is that these ETFs didn't appear out of nowhere. For over a decade prior, there had been dozens of attempts to approve spot Bitcoin ETFs, but with no success. The result was that TradFi investors started looking for alternative assets via which to get exposure to Bitcoin, such as Grayscale's Bitcoin Trust. Then, in August 2020, a new alternative Bitcoin investment arrived. MicroStrategy, now just Strategy, made the unprecedented move of spending $250 million on Bitcoin under then CEO Michael Saylor. This made Strategy the first publicly traded Bitcoin treasury company, letting holders of its MSTR stock gain BTC exposure without holding it directly. Strategy has since become the world's largest and most famous Bitcoin treasury company. And since Saylor's playbook was made publicly available, many other companies have followed in Strategy's footsteps and formed Bitcoin treasuries of their own. But of course, there's more to the crypto market than Bitcoin, and many TradFi investors want access to other cryptos which don't have ETFs. In retrospect, it's not surprising that companies which started accumulating altcoins started experiencing explosive growth. And these companies have become known as digital asset treasury companies, or DATs for short. Examples include Bitmine and SharpLink, which have focused on building strategic reserves of Ethereum, Forward Industries and Upexi, which have focused on Solana, Vivo Power, which focuses on XRP, and the BNB Network company, which focuses on, well, BNB. And it's not just the biggest cryptos either. We're seeing other DATs spring up for altcoins including Tron, Litecoin, Sui, Hyperliquid, Bitensa, and many more besides. And you can learn more about these by checking out the video right over here. Now, in case you missed the news, there's a load of pending spot ETF applications for a wide range of altcoins which could be approved and listed at any moment. If you watched our recent altcoin ETF update, you'll recall that there were over 90 applications. Well, this number has since gone up dramatically, but we'll come back to that shortly. What's more, though, is that some of these ETFs are practically at the finish line, but can't cross that line just yet. That's because, as I record this, the US government remains in shutdown. That means the SEC is closed for the foreseeable future, leaving the altcoin ETFs in limbo. But once the government reopens, many pending altcoin ETFs could be approved and listed almost instantly. Besides the fact that the final decision dates for these ETFs have already passed, SEC Chairman Paul Atkins revealed on the 29th of September that crypto is the SEC's top priority. In other words, they're not going to be sitting on their hands when they get back to work. What's more, there are also the SEC's new generic listing standards to help streamline the crypto ETF approval process. So long as a spot crypto ETF meets some pre-approved criteria, they can be automatically approved and listed on an exchange. What are these criteria, you ask? Well, basically, the crypto held in the ETF must either trade on an exchange that regulators can monitor through the Intermarket Surveillance Group, or have a futures contract that's been listed on a regulated market for at least 6 months, with an agreement in place to share trading data. Alternatively, a crypto can qualify if it's tracked by a listed ETF with at least 40% exposure to the underlying asset. So, thanks to this clarification of the rules, getting a spot crypto ETF approved is now simpler and faster. Unsurprisingly, this fired up the issuers, sparking a flood of applications. At one point, over 50 applications were filed in a single day. From what we can gather, there are now a total of 33 cryptos with pending altcoin ETFs at the time of shooting. And for those wondering, the list of altcoins in alphabetical order is as follows: Aave, Aptos, Avalanche, Axelar, Bitcoin Cash, Bitensor, Bonk, Cardano, Chainlink, Cosmos, Kronos, Dogecoin, Ethena, Ethereum, Hedera, Hyperliquid, Injective, Litecoin, the Melania meme coin, yep, afraid so, Near Protocol, OKB, Ondo, Pengu, Polkadot, Sei, Solana, Stellar, Sui, Tron, the Trump meme coin, Uniswap, and XRP. Whew. Now, there is a decent chance that these cryptos will pump once their respective ETFs have been approved. And if you want to maximize your returns when that happens, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do right now is hit the link in the description or scan this QR code. Once you get on the deals page, you'll see all of our offers across a range of exchange partners. Click one of the Sign Up Now buttons and that should take you right to the deal. Now, these deals won't be around forever though, so take advantage of them while you can using the link in the description below or by scanning the QR code on screen. So, it's safe to say there's plenty of hype around the imminent altcoin ETFs, and many believe they could finally open the doors to the long-awaited alt season. However, there are also concerns that these ETFs could divert investor attention and capital away from the altcoin treasury companies we mentioned earlier. If that happens, many of these companies might struggle and could be forced to liquidate the altcoins they've accumulated, creating massive selling pressure that pushes crypto prices down. But just how likely is this? Well, on the one hand, you could argue that it's unlikely simply because it didn't happen with Bitcoin. Take a second to consider that Strategy has been stacking BTC like crazy, but MSTR's stock is still in a long-term uptrend, despite the rapid growth of the spot Bitcoin ETFs. In theory, the spot Bitcoin ETFs should have hurt Strategy, but they didn't. So, given this fact, we probably shouldn't worry too much about altcoin ETFs competing with DATs anytime soon. TradFi investors will simply have another way of investing in altcoins, the same way that they have another way of investing in Bitcoin. But there's no denying that there are significant differences between Bitcoin and other cryptos. In this case, most DATs rely on issuing equity and leveraging their balance sheets, often raising funds through private investments in public equity or PIPE deals. These give institutional investors discounted shares, which can later be sold on the open market for profit, something that could become problematic. Just look at Upexi and SharpLink, two of the biggest treasury companies for Solana and Ethereum, respectively. In both cases, their stock prices plunged by over 60% once those PIPE shares hit the market. To be frank, the fact that we're already seeing weakness in the stocks of these altcoin treasury companies, even without the competition of altcoin ETFs, is a somewhat worrying sign. And not only that, but spot altcoin ETFs could be a more attractive investment simply because of who's backing them. Many are backed by the world's largest financial institutions, including BlackRock, VanEck, Grayscale, and Fidelity, among others. This makes altcoin ETFs more trustworthy in the eyes of many TradFi investors compared to brand new speculative DATs. And this begs the question of what could cause DATs to sell their altcoins. Well, the answer is MNAV. For those unfamiliar, MNAV stands for Multiple of Net Asset Value. An MNAV above 1 means the crypto treasury company's stock trades at a premium to its assets, while below 1 means it trades at a discount. A positive MNAV lets these companies raise funds using debt, which they can then use to buy more crypto and boost their reserves. But if that premium shrinks too much, the company becomes less attractive to investors. This means it loses access to debt financing and that can eventually force the company to liquidate some or even all of its crypto reserves just to stay afloat, adding heavy sell pressure. So, now that we understand what's at stake, the question is which altcoins would take the biggest hit if things did go south? Well, logically, the most vulnerable would be those held by the most Treasury companies, since that means greater exposure to risk. Not surprisingly, Ethereum is at the top of the list. It's currently held by 67 different Treasury companies. The top 3 Ethereum DATs, Bitmine, Sharplink, and the Ether Machine, hold over 4 million ETH collectively, about 3.4% of ETH's total supply, worth roughly $20 billion. If any of these giants were forced to liquidate, it would crash ETH's price and the stocks of all the other Ethereum treasury companies into the bargain. Conversely, the collapse of smaller Ethereum treasury companies could cause investors to become worried about the solvency and sustainability of the larger ones, resulting in a bottom-up explosion rather than a top-down one. Regardless, though, any issues with these DATs could hit ETH hard. Now, Solana is the second crypto on the list. Sol is currently held by 18 different treasury companies. The 3 largest Solana treasuries are Forward Industries, Sharps Technology, and DeFi Development Corp. Collectively, these 3 companies alone hold more than 11 million Sol between them. And this accounts for around 2% of Sol's circulating supply, valued at around $2.5 billion. Now, logically, the same risks apply as to the Ethereum treasury companies here. Now, although Ethereum and Solana currently dominate the DAT landscape, it is important to remember that there are treasury companies for other altcoins as well. For instance, at least 8 firms have launched dedicated XRP treasuries, with major players such as Vivo Power, Trident Digital Holdings, and Weebus International. There are also companies building treasuries for BNB, Dogecoin, Tron, Sui, Litecoin, and Hyperliquid, among others. Each of these has their own spot ETF currently pending approval and could therefore face the same headwinds once they go live. Never mind the fact that any issues with a major DAT like Bitmine could result in chaos across the whole DAT industry. Now, we've spent a lot of time discussing how spot altcoin ETFs could end up being bearish for altcoins due to the effects they could have on DATs. So, I reckon it's about time we flip the script. How bullish could these altcoin ETFs be for their respective coins and tokens? And could they even be positive for DATs? You'll recall that spot altcoin ETFs are ultimately just another way for investors to access altcoins. As we've seen with the spot Ethereum ETFs, availability does not guarantee inflows. To get inflows into risk-on assets like altcoins, you need a bullish macro backdrop that's supportive of risk-on investing, plus catalysts that bring attention to these altcoins specifically. Well, at the time of shooting, the macro backdrop is looking pretty good. Stocks and precious metals are making new all-time highs, the US dollar is weakening, and even Bitcoin has been hitting new all-time highs recently. This suggests that it's only a matter of time before that capital starts to flow into altcoins, and it looks like the altcoin ETFs will be ready for when that happens. At that stage, the only thing missing would be catalysts that bring attention to these altcoins. And funnily enough, the ETF approvals themselves could be the catalyst that brings attention and investment. The individual cryptos in question also have catalysts of their own, though, like Solana's Alpenglow upgrade. And you can learn more about that using the link in the description. Anyways, another practical effect of the spot altcoin ETFs being approved could be that it brings attention and capital to the other altcoins with pending applications. After all, if investors see that cryptos like Solana are getting spot ETFs approved, they'll probably start speculating on the cryptos that will get ETFs next, especially if the spot Solana ETFs do well at launch. And yes, it's even possible that these spot altcoin ETFs could bring more attention and investment to their respective DATs, particularly if the altcoin ETFs see large inflows at launch. That's just because some percentage of investors could choose to diversify by investing in both the altcoin ETF and the DAT, the former having lower risk and the latter having higher risk. And if that does happen, then it means it'll be easier for DATs to take on more debt to buy more of their respective altcoins, resulting in even more attention and investment into those altcoins. Put simply, the spot altcoin ETFs could, keyword could, kickstart a positive feedback loop that results in ever more investment and attention into altcoins and related assets. And before you drop a comment about how these altcoin ETFs or DATs will somehow drain liquidity from other assets in crypto, take a look at what we've seen in the precious metal space. When gold rallies, gold miners eventually rally too. Does this mean silver doesn't rally? Of course not. Silver rallies eventually, and then so do the silver miners. And just recently, there was a big rally in palladium, suggesting that capital in the precious metal space is moving further out along the risk curve and into all sorts of assets, not just ETFs. So, chances are we're going to see the same thing with altcoins. After all, that's what's happened in every single cycle so far. Surely this time isn't different, right? Okay, if you want to prepare yourself for crypto's final pump, then check out the video right over here. And if you want to know which indicators you should be watching, then check out the video right over here. Okay, thank you all so much for watching, and we'll see you again in the next one. This is Guy, over and out.